Welcome. This is India Market Open. You're watching, the futures and options space and where we are in fact expecting these benchmarks to move around. So let's take stock of that. Now, yesterday was yet another day of trade where we in fact didn't see too much movement on the Nifty, closing marginally in the red, and that has been a little bit of a trend over the course of the last few days, hanging around between the mark of 22,500 and 23,000. That's the kind of range within which we're seeing the Nifty move. And rollovers have picked up to a certain extent at the moment, looking at 46%. June open interest now being further activated, a lot more positions being built there, keeping in mind, I reckon, the outcome of the general elections in the first week of June. As far as the Bank Nifty is concerned, the rollover number looks a tad higher than the Nifty, at around 49%. Now, the Bank Nifty also came off by around 0.3%. And that said, we're still a little bit uncertain with respect to the direction of the Bank Nifty. It does seem like the markets would want to test the 50,000 mark on the Bank Nifty, but that hasn't come to be so far. Coming down to the options market, yesterday was the day where we saw a little bit more call writing coming through, specifically around the 23,000, the 23,100 strikes. And in terms of your overall option open interest, as far as this week's expiry is concerned, we do have a significant amount of writing around the 23,000 calls as well as puts. And moving on, when it comes to the June 6th expiry, not much has changed except that we have seen more and more call and put writing around the 23,000 strike. On the higher end, we have max OI around 23,500, and on the lower end, we have max OI around the 22,500 put. So that's a rough range within which we can expect the Nifty to move within, at least over the course of the next 1 week. Moving on to, the Bank Nifty, and today is the weekly options expiry for the Bank Nifty. This is where 49,500 will be a crucial mark around which we are expecting the Bank Nifty to, move. It's expected to be a choppy session, as has been the case over the last few Bank Nifty expiries as well. And remember, we're coming on the back of a very, very quiet Fin Nifty expiry. So where there's a higher chance and a higher likelihood that today we could get some amount of traction coming in terms of sharp moves. Now let's talk about stocks. And we did see some shorts coming into India Cement, Nalco, and Godrej Consumer, Bandhan Bank and Info Edge looking at shorts as well. In terms of other stocks which should be on your radar, we have short covering in GNFC, Biocon and Hindustan Copper, Piramal Enterprises and Vodafone Idea looking at long and winding coming through. Now, these are just some of the stocks that we can watch out for. But what can we expect going in, and what sort of trade that can we expect? Well, we have Avni Bhatt of JM Financial who's joining us on the show. Avni, good morning. Thank you so much for joining in. Let's start with the first stock on your radar. I believe you have a spread that you're playing out with. Can you take us through your expectations on that stock, as well as the rationale behind which you are deploying this option structure here?
Good morning, Agam, and a very good morning to all the viewers as well. The first stock is HDFC Life. Now we've seen a breakout of the congestion zone of 570 to 572 after almost 10 days of consolidation on the stock. And it has crossed and closed above the highs of last 3 weeks. And a bullish piercing candlestick pattern has been formed on both the daily and the weekly charts, hinting at continuation of this uptrend. If you look at the targets of this particular breakout, then it is placed at around 609. And if even that level is crossed, it may move up to as high as 622. Also on the derivatives parameters, combined futures open interest for May and June together has seen an open interest addition of 2.5% on the long side. So buying interest is picking up in June series call options of 580 and 600 strikes. So the stock is poised to move past 600 zone in a very short term, and the support base has been formed at 560. So we suggest going for a bull call spread in this particular stock with the buying of 580 call at around 23 and selling of 600 call at 16 rupees. So the target for this particular strategy will be around rupees 12,000. And you can keep a stop loss of 6,500 in case if there is any decline in the stock although it may not be hit immediately, but there might be some kind of jitteriness before it starts moving up again.
Right, and yeah. So of course, the advantage of playing a bull call spread is that you have a limited downside, while you also have a limited upside. But of course, provided that your risk-reward ratio is favorable, that is, your reward or your expected return is higher than what you stand to lose. And in this case, of course, Avni is mentioning 6,500 on the lower end. That's the most amount that you should ideally lose, and no more than that on a per lot basis. Well, that's the strategy that you are playing out for. Am I correct, Avni?
Yes, absolutely, Agam.
Right. Avni, can we move on to the next one? And next one is Hindustan Unilever. Can you take us through your rationale here as well?
Yes, so Hindustan Unilever, in the first place, the entire FMCG sector, after a very long consolidation, has started showing green shoots in the offing. So on 7th of May, we had seen a very strong breakout and a up move. And post that, the stock has been consolidating for last 2 weeks, taking support near the short-term moving averages on every decline. So these short-term moving averages have not been breached after that particular strong up move on the 7th of May. Now, yesterday, the stock has moved above the highs of last 2 days and closed above the resistance of 2380. So a long addition has been seen in futures. Delivery volumes have picked up, and it has increased by nearly 40%. So good buying interest is picking up at 2400, 2440, and 2500 calls for the June series. So it's HUL is a very well-placed stock to see a potential up move up to around 2460 in a short time, and eventually 2500 by probably June end. So to play out this move, since the momentum is very strong, we recommend a vanilla call option for June series. One can take an entry in 2440 call option at around 45 rupees. Now today, since markets may open with a gap down and we may see some profit booking in the early hours, I suggest that one should enter into this call option only once it crosses 45. And target for this particular option will be 85 rupees. And on the downside, one can keep a stop loss of 25 rupees.
Okay. Avni, just a follow-up question, because we have a lot of viewers who are very new to option markets. For HDFC Life as well as HUL, you have a positive call, you have a positive stance. But when you are playing a bull call spread on HDFC Life, you have a vanilla call buy on HUL. Can you tell us the difference as to why you are choosing two different option structures when you are positive on both these, and when you in fact have a limited downside on both these options plays?
So it's the pace of move that is the difference between the two stocks. HDFC Life may take a little while to start moving up again, whereas HUL is in a very strong momentum. Now, if you consider the time value depreciation factor, if you are into a vanilla call option, the momentum has to be really strong, and from the point of entry, the stock has to move up immediately. So that kind of momentum is seen in HUL. That's why we are going for a vanilla call option. While HDFC Life may take some time, probably in by next week, it should start resuming the uptrend on a very strong basis. Till then, to avoid any kind of time value depreciation on a vanilla call option, we are protecting that particular factor by selling a higher call on it.
There you have it. You're actually protecting yourself from a significant theta decay when you are actually deploying a bull call spread, which is the case for HDFC Life. And of course, as Avni has said, that she's expecting a little bit more sharper moves as far as Hindustan Unilever is concerned, which also gives you an advantage that's around the time you don't see too much theta decay, especially if it happens very earlier on in the series where the theta component is significantly lower. Well, on that note, Avni, taking a moment to thank you for joining us and explaining those strategies to us, as well as, of course, giving us those option structures that we can deploy on those two stocks.